Welcome back, aspirants. Today's explainer is an absolutely crucial one for your General Studies Paper 3 Economy preparation. We're decoding a very highly anticipated topic, the newly formed Bharat Maritime Insurance Pool, or the BMIP for short. It's basically a textbook example of how a government steps in to secure macroeconomic interests when the globe is facing massive uncertainties. So, let's just dive right in, shall we?
Looking at our agenda, we're breaking this down into 4 core pillars. First, the context of the maritime crisis. Second, decoding what the BMIP shield actually is. Third, the financial mechanics and thresholds. And finally, we'll cover how to tackle this for your GS3 and interview strategy. You'll definitely want to structure your mains notes exactly along these lines.
Moving to Section 1, the context of the maritime crisis. We really need to grasp the immediate geopolitical trigger behind this major policy shift, because, as you know, policies simply don't happen in a vacuum.
Okay, so picture cargo ships trying to navigate the choppy waters near the Strait of Hormuz. We're seeing some seriously escalating tensions in West Asia right now. Now, for your GS3 paper, you absolutely must connect this geopolitical instability directly to economics. Rising risks in that region, they immediately translate into skyrocketing insurance costs and immense uncertainty about whether maritime coverage will even be available. Think about it. If our ships can't get insured, our trade literally grinds to a halt.
And that brings us to Section 2, decoding the BMIP shield. Let's take a look at exactly how the government stepped up to address this massive vulnerability.
So, the Union Cabinet officially approved this proposal on April 18th. And I need you to note this massive figure down right now. The BMIP holds a sovereign guarantee of exactly 12,980 crore rupees. Seriously, you must memorize this exact number for the exam. This massive guarantee is held by the Department of Financial Services, the DFS, to make sure there's a continuous, uninterrupted stream of maritime coverage for our vessels.
Now, what exactly does this pool cover? If you're outlining your mains bullet points, you'll want to note that the BMIP covers Indian-flagged vessels for all risks tied to maritime operations. We're talking about hull and machinery, the cargo itself, protection and indemnity, what we usually just call P&I, and very specifically, war risk. It's a comprehensive coverage package that acts as a direct shield against the fallout from the West Asia crisis.
On to Section 3, financial mechanics and thresholds. Because, let's be real, in UPSC, superficial knowledge is never going to be enough. We need to understand the technical details of how this pool actually functions. It basically operates on a 2-tiered system. For service claims up to $100 million, the BMIP and the pool's insurers are going to handle it entirely on their own. No government help at all. But if claims exceed that $100 million mark, well, that's when the government steps in. That sovereign guarantee of 12,980 crore rupees, it gets invoked as a quote-unquote contingent backstop of last resort. But keep in mind, this happens only after the pool's accumulated reserves, the individual member contributions, and their reinsurance arrangements are totally exhausted.
Now, to give you some high-value facts for your prelims and to really enrich your mains answers, let's look at the first beneficiaries. DFS Secretary M. Nagaraju recently handed over the very first marine hull and machinery war policy to Holger Offshore and Marine Private Limited. On top of that, marine cargo war policies were extended to Vedanta Sterlite Copper for their cable wire imports, and also to Balrampur Chini Mills Limited. Dropping these specific company names, that shows the examiner you are fully up to date with how this policy is actually being executed on the ground.
Section 4, GS3 and Interview Strategy. Let's wrap up this explainer with a highly application-based conclusion that you can take straight to the personality test. I want to leave you with a rather provocative mock interview question. The Union Cabinet specifically noted India's historical, quote-unquote, high dependence on international group of P&I for issues like cargo damage, collision liabilities, and even crew injury and repatriation. So how exactly does the BMIP address this? I want you to think about it strategically. By creating our own domestic insurance pool backed by a sovereign guarantee, we aren't just mitigating an immediate crisis in West Asia. We're actually building long-term strategic economic self-reliance. We're insulating our own supply chains from massive global shocks. Ponder on this angle. Keep revising, structure those notes well, and we'll see you in the next explainer.